How we doing? I'm Ryan Mack. Welcome back to Trading Guys. I'm going to do a midweek review. So let's look at the fundamental midweek review data for currency pairs. I'm going to go through them one by one. I always go through them one by one, except from AUD, Chinese, and New Zealand. It's because they're all correlated, all right? I won't get into that. That's a different lesson on its own. But that's the reason why I do those three pairs together. And they don't have a lot of news combined. If you were to combine all three, for example, USD, Euro, and Pound, then you're just going to have pages and pages of data, right? And it's not easy on the eye. Excuse me. For up-to-date economic data, on the spot news moves, I actually use this, tradingeconomics.com. But because it's not as easy on the eye, you do get far more information here. This website is 100 times better than Forex Factory. And if you're someone who trades, as the news comes out, I'm not a news trader. I just use the data later on to, build up a trading plan and my plan of action for future trades. But I don't trade the moment the news comes. However, if you are someone who trades, for example, CPI news, PPI news, whatever, this website is 100 million times better than Forex Factory. Why? Because the minute this, let's say it's 7:30, right? The minute this clock strikes 7:30, the numbers are instantly on here, instantly. And if you look at the market hasn't even moved when the numbers are on here. Excuse me. If you wait until the numbers come up on Forex Factory, it takes about 3 to 5 minutes after they've already been released here to come up on Forex Factory. And by the time you see them on Forex Factory, you look at the market's already moved. So this is called tradingeconomics.com, okay? But when I'm going through reviews, I jump onto this because it's easier on the eye for you guys, okay? And most people know this, so it's easier for them to absorb, okay? So let's get started. GDP China is low. So what you have to understand is that when China shows negative numbers and it's shown as if it's coming into a decline, as if China's showing quite bearish, pardon me, although we don't trade Chinese currency, when China is weak, it means AUD will become weak, okay? When China is strong, it provides strength to the AUD. If USD is strong, it means AUD is weak. And if USD is weak, AUD economy will become strong, okay? Again, I won't get into why that is. That's a whole different lesson on its own, all right? I'm just trying to kind of get to the point for you guys here so you can understand a little bit more. So GDP quarter on year is a good bit less. Industrial production year on year, you'll see here is less. The reason why it's green, Forex Factory is always very confusing. You will see this green and you will think, oh, that's good. It's only green because it's higher than forecast. But if you look at the previous, it's less. So it doesn't mean it's instantly a negative. It just means that production is slowing down. So things aren't looking too great for China, in that sense. It's not in a growing phase. It's in a retracting phase, okay? Contracting phase, I should say. So just bear that in mind. And of course, we have to take all news into account. You don't just look at one number and think, oh, everything's bad, all right? You need to apply context here. China fixed asset management, investment, retail sales year on year is down. Unemployment rate is the same. New Zealand CPI quarter on quarter is down. AUD employment change. Employment is up. That's good. Unemployment is it's slightly higher, but like employment is massively higher, so it's kind of outweighed it, right? So it's still positive for the AUD. Everything's looking good so far. Okay, so that's I would say AUD strong, still strong. NZD is still weak, so there's no real change there. Okay. The CAD. So as we know, I already explained this in last week's video. CAD is weak. The economy is weak, and I had a guy explaining CAD is weak. It's going to fly. You need to understand the context, right? So, for example, if I say the Canadian dollar is weak, right, and you say, well, the Canadian dollar is going to fly up here. Just because it's weak doesn't mean it's not going to come up here, and it doesn't mean it's not going to come here. It doesn't mean it's not going to come here via whatever other means. The economy is weak. Look, It doesn't fucking lie. The data doesn't fucking lie. The economy is weak. So just because we've drawn a little, a little line on our screen doesn't mean, it's at the lowest low. Well, it's not. It can easily come down here, easily. And if you look at the Canadian dollar, right, look, it's been in a constant downtrend since 2008. Yeah, it had a little uptrend here, but it's been constantly coming down since then, since fucking 2011. The economy is weak. And now the Canadian economy is at probably one of the weakest it's ever been. So you have to ask yourself, why would it now come up to here? Why would it now come up to here? The answer is it fucking wouldn't. You only think it's going to come here because you believe in drawing imaginary lines on your chart and think the market's going to go there. Now, here's the context of it, which is very important, right? Even though it's down here at this low, now this is a good area of value for banks to buy it right now. It's not saying that they would, and I'll show you that they're not buying it in just a moment. But it's a good day. So what you will find is there will be manipulation because this right here is a terrible area to sell from, right? It's weak. You wouldn't sell the Canadian dollar from this area. You want to sell it from either up here or up here and get more bang for your buck, right? It's a business at the end of the day. This is what the big institutions want to do. They don't want to. Can they sell from here? Absolutely they can. It can break away, come back, retest, and then melt. Absolutely. If that's deemed that this is the economy's so bad, there's no way it's going to come back up here. So, okay, this is looking like it's going to be the best price to sell from. So this is going to be the new low, right? So they'll sell from here, come back up, retest it, boom, build their orders, and then they'll melt it again, right? We've seen it over and over again. Like this, like boom, 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 melt, come back, retest, retest, melt, retest, melt. This is the new one. Retest, retest, could potentially melt, retest, melt, right? That can happen. Anything can happen in the markets. It's important to know that, but you need the fundamental data and context to understand where it's going to go, right? So, even though the Canadian economy is weak, does that mean that it's not going to come here or not going to come here? Absolutely not. That can happen because big institutions will manipulate price to get price to where they want it to be in order to then, sell it from a good area of value. So it can absolutely come here and absolutely come here via manipulation. But the point is, overall, the economy is weak. The economy is dog shit. So what does that mean? That means right now, until data changes and economy data changes, you would never be buying the Canadian dollar against a better currency like pound or USD. You would never be buying it against that. So GBP CAD, you would be buying that. You would not be selling that pair. You know what I mean? And so on and so forth. So just because the economy is weak, does it mean it's not going to come? It can come here. Yes, it can, but that's not the real move. That's the manipulation to get it into an area of value because the economy is weak. That's how we know. That's the manipulation because things don't go up on weak economies, right? In reality, they come down. And it really is as simple as that, guys. And the numbers have come in this week, and the numbers are, pretty shit. Let's have a look. Manufacturing sales month on month, down. Wholesales, massively down. Housing stats, massively down. CPI month on month, down. A massive jump. Median CPI year on year, down. Not a massive jump, but it's still down. Trim CPI year on year, same. It's only green because it hasn't moved, but it's only green because they expected it to be less and it wasn't. So you get one little bit of good news, but it hasn't changed anything because it hasn't really moved. Common CPI has dropped. Core CPI has massively dropped. Foreign securities purchases massively dropped. I mean, they've pretty much halved, right? And we've got core retail sales, and they're just month on month, blah, blah, blah. So the Canadian dollar is absolutely shit. You would never, if you're drawing a little line, saying, oh, that's going to fly, you've absolutely lost your fucking mind. Can it come to here? Yes. Can it come to here? Yes, it could. Something could happen. Maybe the price of oil starts to fly, right? When oil flies, the Canadian dollar gets this false strength because it's highly attached to the oil, okay? So it's highly pegged to oil, I should say. So that if oil flies, it gives a strength to Canadian dollar. So what you'll see is Canadian dollar will push up to here. The price of oil will drop. The Canadian economy will still be dog shit, and then the market the currency will absolutely melt because it doesn't have anything else to push it any higher, right? Apart from oil. And you need to obviously wait and see how things transpire to build that up. But you don't just get one good news and it changes everything. When you get one good news, you'll see the candle, you'll see a change, but it doesn't change the overall trend being negative, weak, and bearish. Okay, I hope you understand that. It's very important. Then let's have a look at CHF. There's usually nothing here. It's very important to apply context, right? So just because you say Canadian dollar is weak, it can go up, yes, but the point is going up is not the main move. It's weak, so you're looking for sells. CHF, yeah, there's really nothing. It's increased. So look, you'll see, look, this has went from -3 to 0. And it's red. You might think, oh, why is it red? It's went up. It's increased. Well, the reason why it's red is because it was expected to be 0.1 and it's came in less than they forecasted it. So that's why it's red. But it's actually, again, it's a positive. So that will show you some strength, right? I haven't even seen CAD CHF. Let's see what it does. Let's see if there's anything here. Do I even have it here? I don't even think I have it. Where is it? Oh, there it is. It's not a... Oh, there you go. Look, see? So Canadian dollar is weak. CHF came in good numbers. Bang, away it goes. Now I wouldn't sell it from here because it's not an area of... I'd be waiting for it to come back up to around here before I'd sell it. So I'm not interested really in selling this, but I just want to give you an idea, right, of how it all works. Let's move on. I've already done that. Let's have a look at Euro. Euro so far, industrial production month on month is down. The reason why it's green is because they predicted it to be minus 0.9. It was minus 0.6. So it's taken a massive jump down negatively. So don't be fooled that because that's green, that means it's a good thing. It's not a good thing. That's bearish. When it comes to Euro, we predominantly care about France and Germany. We do take into account like Spain and Italy, depending on what it is. Again, that's a different in-depth lesson. But we really care about France and Germany. Okay, we don't really give a shit about Spain and Italy. So let's see what we've got. Trade balance down. Economic sentiment down. Anything below 50 is bearish, guys. Okay, so let's say this here was 57. And then you look here and it had dropped to 52. That's not bearish. That is bullish. It just means things are slowing down. Anything above 50 is bullish. Anything below 50 is bearish, okay? And likewise, if this number was like 41 and you look now and it's increased to 47, that is not bullish. That is still bearish. It just means things are getting better, but it's still bearish, okay? Very important to understand that in the context. German economic sentiment is taking a massive negative dive. It's only green because it's higher than expected, but it jumped from 47 to 41. Massively bearish, guys. All bearish news so far for the euro, apart from the Italian trade balance. But like I say, we don't give a shit about that. It's not enough to push the European economy. France and Germany are the real movers and shakers, okay? Final core CPI year on year is stagnant. Final CPI year on year, stagnant, no change. Spanish 10-year, nobody cares. So we've got main refinancing rate. Yeah, we've got this later on, but so far euro is still weak, guys. It's still bearish. Okay, so no change from the beginning of the week review. Pound, right move, HPI. So that's negative news. It's went down to -4. This is how many mortgages are approved. why that has an effect on the market. The more mortgages are approved, it means more people are buying houses, right? And that means more money is getting pumped into the economy, which is good for the currency, which means strong, bullish. So this news is negative. CPI year on year is positive. That's good. It's remained the same. So we're at this kind of point where there's no change, but it was expected to drop and it hasn't dropped. So that's good. Core CPI year on year has remained the same. So these things tell you that when we're talking about rate cuts, is the Bank of England, are they going to cut rates? Well, no, when all the news is still positive and it's not really changing, it's not growing, but it's also not dropping. So they won't cut rates when it's dropping. So it gives you that heads up in advance that they probably won't cut rates, coming up, is it next month or September, etc. this month for September. Could be September, but they probably won't cut them this month because everything's going well, right? So these are things that you have to take into account. Also, like I always say, remember, anything can happen in the markets, all right? Anything can happen, but you have to take this stuff into consideration because it does affect how the markets move. PPI input month on month, negative, but remember these are month on month, right? So we do care that they are down. Excuse me, but we have to remember that they're month on month. So month on month stuff has like a little initial reaction in the market, but it's not something that's going to change the whole trajectory of the market, right? Quarter on quarter and especially year on year does that kind of stuff, changes the whole sentiment of the market. But month on month just gives you a little kind of daily move. That's it. Doesn't have a huge effect on the market. As we see here, RPI year on year, it's only dropped by 1 point. That's nothing, or 0.1, sorry. That's nothing. HPI year on year has increased. Today we have got claimant count changes. That is in 3 hours for me. That's important. Average earnings is also important. Unemployment rate important. Retail says month on month, not that important, but we want to see it, of course, right? So today we've got important news for the pound to see where it's going. So far, the pound is still strong, guys. Yes, we do have some, sticky and negative news, but it's not enough to change the pound from being in its strong position. The pound is strong. If you come across and look at GJ right now, you'll be like, oh, look, when I go to the lower time frames, look, you're going to be like, oh, it's melting. It's not fucking melting. You need to understand the markets. Pound is 1,000,000% stronger than the Japanese economy. This right here, all this bullshit you're seeing, this is the Bank of Japan who are stepping in and trying to smash it to bring their currency back because it's so fucked, right? It's so fucked. So retail traders will trade this bullshit, right? Swing traders and large institutions won't be trading this. What the institutions will be doing is they will be taking their profits. They'll be taking the profits out, and that will obviously have an effect on dropping the market as the Bank of Japan are interfering and making the market melt down to these areas, right? Let's have a look. I'll show you right now. Let's have a look at pound yen. So DXM is Dumb Money Index. That's retail traders. If you look down here, retail traders from where this company gets all the data from, 76.9% of retail traders lose their money because they don't know what the fuck they're doing. Retail traders are all in sales right now, right? This here, COT, means commitment of traders. Every single Wednesday, by law, all the institutions across the world, your JP Morgan, Goldman Sachs, your banks, your private hedge funds, they're all the big players in the market, right? They must, by law, submit all the trades that they are in. It's to prevent things like insider trading and stuff happening, right? Let's see what the banks are doing. The banks are all in fucking buys in GJ, right? The banks are all in buys and it's coming down. So what's happening? The banks aren't pushing this down. What they're doing is they're taking their profits. And the Bank of Japan is interfering right now. Now, retail traders will be trading this bullshit because they'll be getting FOMO. They won't understand the economies and blah, blah, blah. Whereas real traders, people who trade real fucking huge amounts of money, will be waiting. And they're waiting for it to hit specific points. Some people do it on the daily. Some people do it on the weekly. So let's see what we have got here. Really, I'd like to see it hit here, but that's a long way away because we're on the weekly, right? So what we could potentially, I don't even like any of it. We could potentially see it retrace here. But again, I don't like any of it. I'd be very cautious to trade this. Let's have a look on the daily. Yeah, look, there we are. So I'd be waiting from these areas. I would say the most likely area is probably going to be this, right? Let's wait. It can come here. Yes, I would say this is probably going to be the most likely, right? We'll come back and review this. It's probably going to take maybe 2-3 weeks for this to play out. We will come back and review this, right? So if you watch this video, remember and come back and see my next one later, and we can see how this plays out. I'd say it's probably going to be roughly about here. If you're in my group, you will understand why it's here, right? There's a genuine reason. I haven't just drawn a fucking box on here and you'll flip the coin in there and says, oh, it's going to hit here because I've drawn a fucking box there, right? It's not how the market works. There is a genuine reason why that box is there, based on economic data, based on banking data, fundamental reasons, the whole fucking shebang, right? There's a purpose why that box is there, all right? So I'm just simply waiting, guys, until this market comes down here, gets to an area of value, then would enter buys, and then fuck off. We would ride it. That's what we're looking at, right? It could come here. It can go anywhere, right? But these are the areas that I'm interested in. Anything outside of this box, outside of this box, and outside of this box, I am not interested in what the market does whatsoever, okay? Again, if you're in our group, you will know the reason behind that, and it's not just because I've flipped a coin in there, all right? Japanese yen. Let's have a look. We all know the Japanese yen's fucked. It's totally shit. The economy in the Japanese yen is absolutely fucked. All right, they're just interfering. That's why it's doing that. So there's no news. And last but no means least, USD. Empire State Manufacturing Index is minus 6.6, so that's weak. Core retail sales are strong. Retail sales month on month are okay. They've decreased, but it's month on month, right? We don't really care about that. It was expected to be much less, and it's came in higher than expected. So import prices, blah, blah, blah. Let's have a look at the ones that we care about. Building permits, that's positive. Housing stats, positive. Capacity utilization rate, positive. Crude oil inventories, minus 4.9. It was supposed, they thought it'd be, let's see, 0.9, okay. We really need to see unemployment claims. We really need to see that today. We want to see the Fed manufacturing rate. That's pretty much it. Obviously, we've got some FOMC stuff tomorrow that we'll have a look at. But yeah, we want to see unemployment rates. So far, the USD is still strong, guys. They won't cut rates, right, until these numbers start coming down on their own. Then they'll cut rates. They're not going to cut rates until then, all right? Currency pair-wise, guys, markets are absolutely shit right now, okay? Bearing in mind, I am a swing trader, so I've been trading this is nearly my 9th year. By December, this will be my 9th year trading. I trade large PAM accounts for companies. If you are in my Discord education platform, all my training is done live in front of your face, right? I don't just send in signals, but I also teach people. And whenever I take a trade, I do it all live in front of your face so that you can actually learn why I'm taking a trade, the reasons. How do you know if it's a long? How do you know if it's a short? I don't do any of this this retail trader bullshit where you draw a stupid fucking line on your chart. The minute that breaks, it's going to go short. No, it's not, because retail traders will think it's going to go like this. Oh, it's broke. Oh, it's going to hit here again. Now it's going to melt, and it won't. It will come here and it will fucking fly. Why? Because economically, pound is super fucking strong. Japanese yen is super weak. Here's an example, right? If you're a banker, I say this in every fucking video, but I'm going to say it again because you never know who's watching the video for the first time, right? If you're looking at pound and everything's strong, unemployment is low, employment is high, CPI is high, PPI is high, fucking average earnings is high, blah, 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 right? Then it means everything in the economy is good. It means that the currency is strong. It means that if you are a banker and you are a large institution and you want to invest in an economy, it means that if you invest in the pound, because the economy is doing so well, it's providing you with low risk and a very high possibility of yielding you good returns because everything's going well. If you look at the Japanese yen, everything's going weak. They're totally fucked. I won't bore you with going into the details again, but everything's fucked in Japanese yen, which means that if you want to invest in the Japanese economy, it's going to be very high risk. And because the economy is so bad, it means that it's high risk, but the opportunity to potentially give you high yields and good returns is very, very low. So what does that mean? That means that if you're then looking at a pair like GJ, you aren't selling it. Yes, it's coming down just now. This is just all the big institutions taking their money and it's dropping down, and the Bank of Japan interfering because their currency is so fucked. They have to interfere. But you're not, if you're a patient fucking, a real trader and not one of these stupid fucking line traders, you're not selling this. We're not in this to make a quick fucking $200, right? We don't care about that. We're in this to make some real money. And we're just waiting, like a sniper, not a machine gunner taking fucking pot shots at everything that's moving. You have to wait like a sniper and wait for your shot to come. My shot, in my opinion, is probably coming when it hits this location here, right? I won't get into the reasons because that's another fucking story on its own. Why, okay? But if you're in my educational platform, you will understand why, and you've probably marked it up exactly the same as this. And that's it, guys. That's how it works. Banks and big institutions who are trading hundreds of millions of dollars do not draw a stupid fucking line on their page and say, oh, look, it's going to, if that breaks this line, guys, what we're looking for is it's going to come here, reject, and it's going to melt. Fuck off. You've lost your fucking mind. And the sooner you realize that, the sooner you will become a consistently more profitable trader. Yes, you can make money doing all this stupid fucking line bullshit. Anybody can make money. You can make money flipping a coin in the air and guessing if it's going to land on heads or tails, right? You're going to fucking make money. It's just luck. It's not trading, all right? So that's what happens here, guys. If you would like to learn this, you can come across to www.thetradingguys.com. And to put our money where our mouth is, to show you we ain't bullshitters, you can come and test us out. We offer you a full month completely fucking free. Look, I'll show you it right now. Let me show you our group right now. Sorry, I'll put it in the center so you can see it. Look, here's a group for you. So this is my business partner, Lee. He does scalps. If you're a scalp trader, we also teach scalps. I don't do scalps because I think it's bullshit. But Lee loves it and they're highly successful. Look, so they are scalping this, right? I ain't a scalper. Look, boom. So we teach scalps. I teach swing trading. Here is our members here. This is in one day. So when you finally get to the stage where we charge your subscription, it's £97 a month, right? Look, in one day, copying our trades, he's made $278. I'll show you right here, trade results. Look, Suresh, $19. He took a small scalp. Pats, $278. This is just one day, guys, one morning. Suresh, $54. Pats again, $206. Alex, $314. Alex again, $425. This is one day, guys. This is not weekly. This is not monthly. This is one fucking day. Pat's again, 170. Alex again. So this is Suresh, 114. This is me, 5,335. This is just my oil trade that I've done. I've already closed it out. Suresh again, 110, 150, minus 52, 208. Look, time is another one of me, 6K, blah, blah, blah. So you get the point, guys, right? General chat, we have it all here. We have all your trading videos here. We offer daily mentorship. So not only we don't just get you on board and offer you a training video and say, watch the videos and then, fuck off and do it by yourself. Watch the videos. After the videos, any questions that you have, you can ask us daily. We're on here all day long. Right now, I'm a swing trader, right? I haven't placed a single trade in currencies this is going to be the third week because there's nothing to trade, guys. There's just nothing to trade. And this is why people find trading so hard, because they don't have patience not to trade when the market's just shit. I can wait all day long because I know the big money comes in the waiting, right? And we teach that. So while I'm sitting here doing nothing trade-wise, I still check the markets every day and I offer one-to-one mentorship. So if you come on and you say to me, Ryan, can we do a one-to-one? Can you show me why I'm going to mark up this chart here and why I'm going to do this, why I'm going to do that? I'll help you every step of the way. All right, guys. So that's what we offer. And like I said, whenever I do trading and I'm trading my large managed account that I manage for different brokers, it's called a PAM account. I trade it for loads of different clients. You can physically watch me trade live so you can see that we're not bullshitters. All right. We offer a full month completely free so you can come and test us out first. All right. Have a great week, guys. Whatever you do, don't be taking stupid trades. Whatever method of trading you use, if you're a day trader, scalp trader, swing trader, I wish you the best of luck. But whatever you do, please, please stop doing this stupid fucking line bullshit. Just because you make a couple of quid doing it, if this candle breaks here and you make a couple of quid catching this stupid fucking move, you're just building bad habits. You'll go through years of break even. If you sit down and you're honest with yourself, you won't be a consistently profitable trader. You'll just be, you'll win some, you'll lose some, you'll win some, you'll lose some, and you'll be at break even all the time. I'm telling you, right? If you want to learn this, hit me up. Have a good week.